And thanks for staying with us here at 4:30. I'm Brent Harden.
And I'm Amanda Rouse. Prices are up 6.8%, the highest levels of inflation since the 1980s. We're also facing a COVID surge and uncertainty in the stock market.
And with all those factors at play, how do you protect your finances? Well, today we are joined by Daniel Friedman from WMGNA Tax Out Financial Solutions. Daniel, welcome.
And Daniel, you had told us that you have 4 crucial things people should do to make smart financial decisions during all of this uncertainty. Let's just dive right in. What is number 1?
Well, number 1 is to continue to take a big picture view. If you have a overall strategy, re-review it, stick to it. Some of the things that we're doing here is end of the year tax planning. If there's tax savings that you haven't taken care of, if you haven't made that 529 check contribution to get a state of Connecticut income tax deduction, do that. Those kinds of things allow you to best insulate yourself from inflation, stock market jitters, all this stuff with the pandemic that's going on.
Sounds like
So
maybe
that would be the first thing.
don't panic and stick to the plan, right?
Yeah, panicking is never a strategy.
All right, so what's number 2?
Number 2 is, with every circumstance that goes on in the economy or the stock market or in Washington, D.C., tax law changes, there are opportunities. So interest rates are still very low. 3.5% for a 30-year mortgage. That's a giant inflation hedge. That will never go up. So if inflation's 6.8%, a lot of us have not seen. I've seen that, but if you're not 39 years old, you haven't seen it. You would have a hedge on that of almost half. If your mortgage is 3.5% and inflation is 6.8%, you're doing pretty good there. So that's an excellent way to protect yourself from rising prices.
Yeah, and the one good thing here is even though we're talking about inflation, we are not seeing those interest rates and the mortgage rates like they were in the 80s. So that is a benefit here. What about number 3?
Number 3, there's just some simple, consumer ideas. One of them would be to perhaps buy in bulk. So you lock in today's price. If it goes up for your consumer staples, the supply chain issues notwithstanding, getting some of these things. Another is to, as energy prices, figure out a way to have your home checked. I know a lot of the utility companies will come out and check that out. Look for more fuel efficiency on your automobiles if you can. So general things like that, putting off purchases if you can on things like automobiles right now. So if you have a car and it's maybe something you'd like to change, putting some of your cash at 0 interest, you're getting zonked by inflation. If there are opportunities that you can allocate money to investments, typically investments, stock market, diversified. Again, it has to be within a cogent plan. That can greatly help you fight off the eroding purchasing power that inflation takes out of your wallet.
Okay, and with a few seconds we have left, you got a number 4 for us?
Yeah, number 4 again is to worry about the things that you can control. So, if you haven't been getting the match from your employer on the 401k, start right now. Open enrollment is going on. If you're on Medicare and you don't have the best plan, change it. Save a little more, spend less, and have a positive attitude about things. Any bet against the United States has been a losing bet since Washington was in his stockings in Trenton there. So keep the faith, stay positive. This too will pass.
All right, that sounds great. We appreciate the advice.